Inflation figures for the month of June slowed to 8.4% in Nigeria. That's from 9% in May, keeping inflation below 10% for the 6th straight month. We review what this means for Nigeria's fixed income and money markets with Ramat Baba. She's a currency trader at UBA. Thank you so much, Ramat, for joining us. And let's start with that point. The inflation numbers, in line with expectations, it has fallen back. How have the markets reacted? Let's start with the bond market.
Inflation figures reduced to 8.4% in June. That's from previous month's 9%. That's for May. This actually goes with the CBN's objective of keeping inflation figures at a single digit. And as a matter of fact, this has been the case in the last 6 months. In the bonds markets, we saw the FDIs bringing in funds, though minimal. I believe that is for the bonds auction which held today, and I believe this is actually as a result of the reduced inflation figure released for June.
All right. If you can just quickly touch the currency market, the naira, of course, has been a bit volatile recently, but it seems that there's some calm right now. The central bank sold $700 million at WDAS this week, so slightly higher than what we usually see. They tend to sell about $3 million every session. Can you talk us through how the market has reacted to that sale?
Okay. In the last week, the naira has been trading high in the interbank FX market. Before now, it was trading at levels of 163 naira to the dollar. The NMPC came in last week and about $300 million was sold. This actually provided some form of support for the naira. However, the support was short-lived because the naira actually traded at 160.03 that day, but went back up the following day. Today, the market traded within a range of 161.20, 161.45 on the bid, closing at 161.45. Right. The CBN sold a total of $700 million this week at the stop rate of 155.76. At the WDAS window, the naira has actually been stable, and I think the CBN is keeping to its resolve of continuous defense of the naira. Do
you get a sense that stability will be maintained going forward?
Well, I think, in my opinion, I believe the naira will still go back up a bit. Albeit it might just get to the levels of 163 levels and come back down again.
All right. If you can come back to the bond discussion, and like I mentioned, it was widely expected that we would see that inflation number at sub 8.5% for June. But the big question now is how do the bond markets react going forward? And you've just talked about how they've performed today. What are your broad expectations about where they go from here? Because there is now a sense that there is a huge premium above inflation on bond and even treasury bill yields.
For bonds, we expect that the yields will go up at the auction, probably to the higher levels of 13% at the auction. That's higher than what it was at the last auction. Today, we saw lots of counterparties buying, and as a result, yields trended down. Also, for treasury bills, we saw yields actually declining across all maturities as the market awaited the inflows of the FAC funds.
All right, and let's talk about the money market now. You just mentioned the FAC funds is something that everyone is expecting. How do you see the volatility going forward in the money market going forward?
In the local interbank naira market, in the last week, the market has been very active. At the start of last week, Monday precisely, the market traded at levels of 10.25%. But by Wednesday last week, we saw rates inching up, and that was actually due to the reduced liquidity in the system. There were Omo bills maturities last week, but of course, there were also sales, and almost all the funds were mopped up from the system. Today, the market traded at levels of 14 to 14.5% for overnight funds. That's actually on the back of FX funding, as most counterparties could not access any of the CBN lending windows as they were funding WDAS. This week, we actually expect that FAC funds will hit the system any moment from now. The meeting was concluded on Monday, and 718 billion was approved. And once these funds come into the system, we actually expect rates to tank again and the market to trade at levels of 10% and thereabout, until, of course, the funds are mopped up from the system again, probably through almost sales or FX.